All right, today we are diving into three huge stories that are basically rewriting the rules for your digital wallet. We're going to look at how AI is learning to shop for you, how pure speculation is kind of becoming the new fantasy football, and how one of the original fintech pioneers is finally getting its moment in the spotlight.
This quote just nails it, doesn't it? We're not looking at three totally separate things here. Think of it like three different tracks on one big album that's telling the story of where our money is going next. You've got AI, you've got these gamified markets, and then you have a classic finally getting the credit it deserves.
So, let's drop the needle on track 1.
First up is this massive partnership between the payment giant Stripe and the AI powerhouse OpenAI. And look, this isn't just another tech collaboration. This feels like a fundamental change in what we're going to expect AI to do for us.
And this slide, well, it lays out the whole shift perfectly. For years, we've used AI to find stuff, to tell us things. But this new partnership turns AI into an agent that can actually go out and do things without information. It's moving from being a search engine to being your own personal shopper. And that leap from tell me to buy me could completely change e-commerce as we know it.
And in practice, it's actually incredibly simple. So let's say you ask ChatGPT for a unique gift idea. It finds the perfect custom candle. And then, and this is the magic part, you buy it right there inside the chat. No opening new tabs, no filling out clunky checkout forms. That seamless path from wanting something to owning it, that's the real game changer here.
This quote just gets right to the heart of Stripe's whole strategy. I mean, think about it. Just like they did with crypto and e-commerce, Stripe is embedding itself to become the essential, invisible plumbing for all these AI-driven purchases. They're making sure that no matter what the next big thing online is, their payment system is the one making it all happen.
Okay, let's switch to the next track on our playlist. We're moving from how we buy things to pure speculation. This is where Robinhood is basically turning cultural debates and market hunches into an actual product you can trade, just like a stock.
And the reaction from the market has been, well, huge. We are talking about 4 billion. That is the total number of trades made on these new things called event contracts. It's a massive number, and it proves this is way more than just some niche gimmick.
But here's where it gets really wild. This chart shows you the incredible acceleration. So, it took about a year for Robinhood to hit its first 2 billion trades. The next 2 billion? That happened in just the last quarter alone. I mean, come on. That kind of exponential growth is exactly the thing that makes Wall Street sit up and pay very close attention.
So what exactly are these event contracts? Honestly, the concept is dead simple. They're just yes or no bets on things that happen in the real world. You're not trying to analyze some complex financial statement. You're just making a call. Will this thing happen or not?
And you can bet on almost anything. Seriously, we're talking about the stuff you already argue about in your group chat. Will the Fed mess with interest rates? Will your favorite team make the playoffs? Is a pop star going to drop a surprise album? It really blurs the line between finance and fantasy sports, turning cultural chatter into an actual asset you can trade. And for our final track, we're turning to a story that's been 17 years in the making. Let's talk about Wealthfront, the original robo-advisor that brought set-it-and-forget-it investing to a whole generation, and it's a long, long-awaited move to finally go public.
Wealthfront's journey has been a marathon, for sure. Not a sprint. It started way back in 2008. Then, just a couple of years ago, a massive $1.4 billion sale to the banking giant UBS just fell apart at the last minute. But instead of fading away, they hunkered down, grew their business even more, and now they're heading for an IPO, completely on their own terms. It is an amazing story of resilience.
And the numbers really show they are ready for this. With nearly $80 billion in assets under management and a profit of over $120 million just last year, Wealthfront isn't some risky startup anymore. It's a stable, mature business. These are the kinds of solid numbers that the public markets love to see. And yep, they're heading to the NASDAQ under the ticker WLTH.
So, why go public now? Well, it's all about evolution. Going public gives you a level of credibility and transparency that's absolutely crucial if you want to attract those wealthier, more established clients, the ones who might have written Wealthfront off as just an app for millennials. This is their big move into the major leagues.
All right, let's bring it all home and look at the big takeaways from today's FinTech playlist.
So, what's the big picture here? First, that Stripe and OpenAI deal is pushing AI from being your research assistant to being your purchasing agent. Second, Robinhood is proving you can take speculation about culture and turn it into a massive tradable product. And finally, Wealthfront is showing us how a fintech veteran can use its own history as a launchpad for a huge next chapter on the public markets.
You know, each of these stories shows how the financial tools in our pockets are becoming more integrated, more powerful, and way more intuitive. It really leaves us with a fascinating question to chew on. As your phone becomes your wallet, your stockbroker, and your shopping assistant all at once, what comes next? What's the next track on this playlist going to be?